Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about the ultimate Ichimoku Cloud trading strategy, which is a powerful and comprehensive approach to analyzing trends, momentum, and support and resistance in the Forex market. So if you've ever struggled with identifying clear trade setups or timing your entries and exits, this strategy is designed to simplify your decision-making process and give you a structured framework for success. So stick with me until the end of this video and you will learn how to apply this strategy step by step to maximize your trading potential. So without wasting any much of your time, let's get started. This is the TradingView platform and we are on the 1 hour time frame. So first of all, I'll start by defining the Ichimoku Cloud, its components, and what it is made of. The Ichimoku Cloud, also known as Ichimoku Kinko Hill, is a powerful technical indicator that provides traders with a comprehensive view of market trends, momentum, and support and resistance levels. It was developed by Japanese journalist Goichi Hosoda in the 1930s, and it was published in the late 1960s. Its name translates to one look equilibrium chart. So Ichimoku Cloud means one look equilibrium chart, emphasizing its ability to offer a snapshot of market conditions at a glance. As you can see, it's made up of so many components. It's made up of 5 components actually. So we're going to discuss the components one by one. I'm going to have the settings out. So before you're able to trade with this, you need to first of all know what the components are before I'll show you the strategy. So the first component is the conversion line. Now, the conversion line it represents short-term price momentum and is calculated as the average of the highest high and the lowest low over the past 9 periods. It reacts quickly to price changes. This is the conversion line. This is the blue line here is the conversion line, as you can see. Then the next component is the baseline. Now, the baseline is a medium-term trend indicator calculated as the average of the highest high and lowest low over 26 periods. It serves as a reference for overall trend direction. Now, that's the baseline, is the red line, this red line. Now, the next is the leading span A. Now, the leading span A is the midpoint between the conversion line and the baseline plotted 26 periods ahead. It forms one boundary of the cloud, actually the green boundary. You can see it's this green line which forms the cloud, and the red line, as you be able to predict, is the leading span B, which forms the other side of the cloud. And this is the average of the highest high and lowest low of the past 52 periods plotted 26 periods ahead. This line forms the other boundary of the cloud, just like I've explained. Now, the last and final component is the lagging span. Now, the lagging span is it plots the lagging span actually is the current closing price plotted 26 periods behind. It helps confirm trends and potential reversals. Now, you should know that the lagging span is this one. This green line right here is the lagging span. Now, there are so many components, but I'll show you how to use all these components in a well-rounded strategy using this Ichimoku Cloud so that you don't get confused. Then the last is the cloud, which we have talked about. The leading span A and the leading span B make up this cloud. So the green cloud indicates bullish sentiment. So when Senku span A, which is leading span A, is above the leading span B, we are bullish, and when it is below it, we are bearish, just like we had here. As you can see, had that cloud red here. So this shows that we are in a bearish sentiment, and this is also when the Senko span B is above the Senko span A, which is the leading span. When I say the Senko is just the Japanese name, so the leading span B is above the leading span A, so it means we are bearish. So let's talk about the trading strategy which you can use for the Ichimoku Cloud. The trading strategy we're talking about today, the first step is to wait for price to break above or below the cloud, which helps us confirm the trend. So we should wait for price to break above or below the cloud, just like you can see it happening here, confirming that yes, the trend is either bullish or bearish. In this case, it is bullish because we broke above the cloud. Now, that's the first step, and this breakout above the cloud signals a bullish trend. So that's for the first step. The next step is to confirm the conversion line and the baseline crossover. So after once price has broken through the cloud, wait for confirmation via a crossover between the conversion line and the baseline. Remember their colors, the conversion line is the blue line, the baseline is the red line. And for a buy signal, just like we have here, the conversion line should cross above the baseline. For a sell signal, it should cross below. So we have a cross here happening right here, where you have the blue line crossing above the red line. So this right here is the conversion line crossing above the baseline and is a signal for buys. So after spotting the break above, confirming the trend, the next thing is we should confirm that the conversion line is above the baseline. And we can see that happening here also. After this breakout, we have that happening here. So the next step is to verify the lagging line. Now the lagging line provides additional confirmation by showing how current price action compares to historical levels. So for a strong buy signal, ensure that the lagging span is above the price from 26 periods ago. Similarly, for a sell signal, it should be below. So we are talking about the lagging span, which is this green line. So this green line should be above price from 26 periods ago. Now you look at this, this helps us to confirm the trend. We have it going above price here. Just as price was moving ahead, the lagging span was also moving ahead here. So this shows us that yes, indeed, a buy signal has been verified here and we should be looking for potential areas to buy. So the next step is to look for candlestick patterns or your uh, support and resistance key levels, which you can use to enter the market. Or you could just enter at the next candle, but I won't advise that. I'll suggest you still look for price action. It could be gaps, it could be double bottoms, like you have a double bottom forming here. If you look at this closely, after we have all our confirmations, we have a double bottom forming right here before we had the push to the upside. So also you can see here there's a key level right here. This is a breaker block. Remember, we are on the 1 hour. It's advisable you look at it, you look at the charts from the higher time frames so that you won't get caught up in the noise. I can enter a buy from here, stop loss below this swing level, and your take profits all the way up. Target a 1:3 or a 1:2. So always ensure you place your stop loss order just below the low of the breakout candle for long trades or above its high for short trades. And this protects your position from sudden reversals while keeping your risk manageable. So let's look for a sell setup so that we can also see a sell setup example. So remember, the first step is to watch out for the break below the cloud for a sell setup. The next is to watch out to verify the crossovers where the conversion line is below the baseline. We have that happening right here. You can also see the cloud change from green to red right here, indicating that yes, we should be looking for selling opportunities. We have the lagging span here being below price from 26 periods ago, indicating that yes, we should be looking for selling opportunity. There are just so many confirmations. So we should, the next step is to look for support and resistance key levels. We have this breaker block happening right here, which we can use to take a sell trade. For liquidity traders, you can see here was used as liquidity. This zone here was used as liquidity. So we just take a short trade from here. As price taps into that, our stop loss above that key level, and our take profits all the way down. Target a 1:2 or we could target a 1:3. You can also use the conversion and baseline to also trail your stop loss. You can also use the cloud to trail your stop loss where you have a crossover and the cloud changes to green. You could also take profits at that level. So study this in your charts and let us know in the comments. We want to hear about your experiences using the Ichimoku Cloud strategy, which we have explained in this video. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.